Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Thursday, everyone. These are the stories that set your agenda. Asian shares gain after China urges insurers and mutual funds to buy more stocks. The latest support for markets in the face of Donald Trump's tariff threats. Billionaire bust up. Elon Musk says, show me the money to companies that promise President Trump billions for AI infrastructure. OpenAI's Sam Altman, though, pushes back, saying Musk is wrong. Plus, in our Davos exclusive conversations, Volodymyr Zelenskiy calls for US troops in a potential peacekeeping force in Ukraine. And Argentina's president says he could leave the Mercosur trade pact for a deal with the US. European futures are pointing lower by 0.2%, but put it in this context. You've seen 6 straight days of gains for European stocks, up at record levels right now. So a bit of profit taking, a bit of a breather, arguably, before we get more of the earnings momentum coming through next week. FTSE 100 futures here in the UK currently pointing lower by 0.3%. S&P futures currently pointing off by 0.1%. But again, the gains for the S&P yesterday, 3 straight days of gains for the S&P, and that index as well, also closing in on record highs. The Nasdaq 100 performing well yesterday by the end of the close, currently looking low by 0.2%. Let's flip the board and have a look cross-asset. You have jobless claims out of the US later today. We are counting down to the BOJ decision, of course, on Friday. Growing expectations that they will hike again for the 3rd time under Governor Ueda. The benchmark US 10-year is currently yielding you 4.60. Not a lot of movement currently in US Treasuries in the session today. Euro-dollar at 104. We've been hearing again from ECB officials on the hawkish end. Holtzman suggesting that there can be patience from the ECB, though he seems to be something of an outlier. $78 a barrel on Brent. There's a report suggesting the inventory build-up is there now in the US. So that's putting a bit of pressure on oil prices, down 0.3%. And gold holding around levels we've not seen since the end of last year, 2,752 for the yellow metal, down 0.1%. But again, holding above those levels for gold as expectations build up. Maybe there's further to run. The tariff threat is building into positioning around the yellow metal as well on some reports. Let's get more in terms of the Asian market view, with really interesting lines coming out in terms of the pressure, at least measures coming through for the insurance sector and state-owned enterprises in China to buy more domestic stocks. Ava Hong in Singapore for the details on that story then.
Yeah, Tom, I mean, just in the past day, you saw how sensitive Chinese stocks are to any of these Trump headlines. So markets were really focused today on this big briefing, and that included the chairman of the securities regulator for measures to support equities. And what we got was how they are going to be encouraging mutual funds, insurers, among other measures, to invest into onshore stock markets, but beyond the impact on A shares and beyond perhaps the short-term sentiment boost, there doesn't seem to be much in the way of a game-changing measure. So very quickly, we saw the CSI 300, the Hang Seng, which climbed well over 1% earlier in the session. Look at how those gains have evaporated. That's the China story, but elsewhere in the region, we're also watching out for what's happening in South Korea. Today, the Kospi underperforming its GDP, South Korea's GDP missed, flipped the board. The main reason why we're seeing that drag on the South Korean benchmark is the benchmark heavyweights, SK Hynix, Samsung Electronics. They are underwater today, and this is for SK Hynix despite reporting record profits. It's failing to meet this really high bar, and of course, this is a key supplier for NVIDIA on high bandwidth memory chips. I think it faces a similar affliction to its top client where it fails to meet lofty expectations. This is what you see in the share performance. So a bit of profit taking also underway on South Korean stocks today. Flip the board again. Tomorrow, as you say, is BOJ day. And we have ahead of the decision tomorrow, a Japan inflation print. But all bets are for a 25 basis point increase. This would be by the most in 18 years. Key to watch will be the tone of communication from Ueda. If he sounds dovish, that could send dollar-yen higher. Remember, there's a lot of uncertainty still regarding Trump's policies. And keep in mind as well that when it comes to Japan Japan's trade surplus versus the US is much higher than during the first Trump administration. So these risks at play that might be reflected in the yen, even if the BOJ hikes tomorrow. Tom.
OK, that trade surplus in Japan could leave it vulnerable then to the tariff threat from President Trump, though he has yet to name Japan in terms of a potential target. But there is that expectation that maybe in terms of the surplus, Japan could be vulnerable. Avra Hong with a check on the Asian markets, of course, and the important details around China's further intervention to prop up its equity markets. Now to what's happening in terms of the tech front and a sparring match, it seems, between Altman and Elon Musk. Elon Musk has clashed with OpenAI's Sam Altman, not for the first time, by the way, but this time over President Trump's AI venture, saying they, quote, don't actually have the money. By they, he's talking about SoftBank and OpenAI, amongst others. Altman hit back, questioning Musk's motives. For more, let's bring in opening trade anchor Kriti Gupta. Kriti, this has broken open into the open. This was posted by Musk on X, and then you had Sam Altman replying. There's a couple of layers to this. One, seemingly, this is a big question about the AI infrastructure plan that he's pushed through. Number two, is this a split now within the Trump team? What does this mean in terms of the relationship between Musk and Trump? I just wonder what you take from what we've been seeing overnight.
Well, a couple of things. And then you mentioned it there. This is not the first time Elon Musk and Sam Altman have come head to head. We know there is a little bit of a rivalry there, especially when it comes to the fact that they both kind of created the early versions of AI together and then had this big kind of falling out about what the future of AI actually looked like, to the point that Sam Altman really pushed forward the concept of AI in everyday lives. Elon Musk took a real step back and said this is actually potentially something that is dangerous and the very first time maybe needs to be regulated, which is, of course, something Elon Musk doesn't often say in terms of his ventures. I think the relationship with Donald Trump may be a little bit more important here, though, in terms of this rivalry, simply because we know Elon Musk and Donald Trump have a relationship, a friendship, for lack of a better term. But you'll remember that even when it came to the pick of Treasury Secretary, Elon Musk had backed Howard Lutnick very, very publicly. And a lot of the expectation was that because of that support, that's where Donald Trump would take his cue. And he did the exact opposite. He chose Scott Bessent instead. And that really, I think, speaks to the idea and almost throws cold water on the idea that Elon Musk is maybe not the Trump whisperer to the extent that everyone thinks he is. That being said, this is still a massive investment, $100 billion that could potentially be multiplied by 5. The idea that Elon Musk is saying, well, maybe this isn't enough to hit those goals, I thought that was quite interesting.
Yeah, fascinating. And there's still big questions about how they get to that point. How do they get to the first 100 billion, let alone 400 or 500 billion US dollars? As you say, the relationship as well, whether or not this is a fracture point in terms of that relationship between Trump and Musk. Meanwhile, we've also been hearing from President Trump articulating his views about TikTok again. And it's a reminder that he sees things much more through the prism and lens of economics and trade deals than national security. And this is what he's been saying around TikTok. Take a listen.
I'll tell you, people want to buy it. People want to buy it.
But those that say they know say it's a spying app for the communist Chinese.
But you can say that about everything made in China. Look, we have our telephones made in China for the most part. We have so many things made in China. So why don't they mention that? You know,
Let me get to
the
some
interesting
issues.
thing with TikTok, though, is you're dealing with a lot of young people. So
they love it.
Is it that important for China to be spying on young people, on young kids watching crazy videos and things?
I don't want China spying on anybody.
No, but they make your telephones and they make your computers and they make a lot of other things. Isn't that a bigger threat?
President Trump speaking to Fox News in the Oval Office. Kriti, you followed the twists and turns of the TikTok saga in detail. What do you make of these comments?
Well, a couple of things. I'll start with the last one he made, which is that they being China, are hitting your phones and spying on your conversations. That was the argument around Huawei and pulling the Huawei infrastructure out of the United States and arguably in a lot of Western countries as well. So that's the parallel that Donald Trump is making. And it's not the only tech company coming out of China that has that impact on the rest of the world, or perceived impact, I should say, on the rest of the world. The TikTok story is interesting because in addition to talking about the ban, the spying ability, we're still talking about who the buyer may be. And this is for the very first time that I've heard in recent history where a president is talking about, an American president is talking about a national stake in a foreign entity that is based in the U.S., let alone a national stake altogether. Just for some context, the last time you talk about this, you're going to things like the railroad in the 1800s, the development of electric grids, for example, things that necessarily need to be put in government hands because privatizing them just puts the cost kind of out of whack. That's really the game changer in this argument, that he's not only brokering a deal, he's talking about how the U.S. government can play a more active role in it. And it comes at a time, by the way, when the U.S. Steel and Nippon Steel kind of conversation as well, one of the concessions there was the government having veto power on the production capacity. So this is a new era that we kind of put under Donald Trump as the kind of deregulation president, and yet there is still maybe a larger footprint in certain areas where the president of the United States, Donald Trump, may have a bigger hand in his role as, in the Oval Office.
So from the domestic security of the US to the domestic security of Ukraine, and we've been hearing from President Zelenskyy, he's been talking to the Bloomberg team on the ground at the World Economic Forum, and he talked about the need for US peacekeeping troops to join any European force after any ceasefire. The significance of this, he basically poo-pooed the idea that Europe could do it alone.
Which is quite contrary to what Emmanuel Macron has said around this as well, because there's been a key piece, a key tension point between France and Germany, as we know, specifically between Emmanuel Macron and Olaf Scholz, about who is brokering that potential ceasefire, both saying that Europe needs to have a hand at the table. Even Vladimir Zelenskyy, who's actively trying to become not just a NATO member, but an EU member as well, saying, well, no, the U.S. very much needs to be a part of that equation. Take a listen to what he told our very own John Micklethwaite.
It can't be without the United States. I will explain you why. Even if some European friends think that it can be, no, it will not be. First of all, nobody will risk without the United States. The second, that's what can divide NATO, divide EU and USA. That is a goal and dream of Putin, to divide this unity.
Vladimir Zelenskyy there speaking to our very own editor-in-chief, John Micklethwaite, at the World Economic Forum in Davos. He's basically making the point that it's the U.S. or nobody in terms of that backing. It also comes at the same time that Donald Trump has allegedly told Vladimir Putin to make a deal on Ukraine or face the costs that include taxes, tariffs, further sanctions on top of, by the way, the sanctions that Joe Biden put on Russia as kind of that last measure, basically risking the fact that there could be higher oil prices down the pike for American consumers.
Yeah, Trump posting that on Truth Social, and to some, at least around the edges, it suggests that Trump isn't just going to go full bore on the Russian side of this. He is weighing up the two, at least to some extent, and putting pressure there on Putin, as you say. Opening trade anchor Kriti Gupta, thank you very much indeed on the significant lines of the cross around TikTok and, of course, AI and the competition between Musk and Sam Altman. Meanwhile, Trump flows and links to everything. Argentinian President Javier Milei says he is willing to leave the Mercosur trade pact if necessary, to leave it, to cement a free trade deal with the US. Although adding he hopes that is not needed. Milei, a fierce critic of Mercosur, spoke to our editor-in-chief of Bloomberg News, John Micklethwaite, at Bloomberg House in Davos.
Well, if the extreme condition were that, yes. However, there are mechanisms that can be used even being within Mercosur. So we think that it can be done without necessarily having to leave Mercosur.
We have a great lineup of guests, possibly with less good sideburns, from the World Economic Forum in Davos, of course, through this hour. David Velez, founder and CEO of Nubank, and Catherine MacGregor, CEO of Engie. Those exclusive conversations coming up. Stay with us. This is Bloomberg. Welcome back. Brazilian fintech Nubank says it now has reached 10 million users in Mexico and plans to expand its product portfolio in coming months. Bloomberg understands the bank is considering moving its legal base here to Britain, which could, of course, be a major win for the UK's efforts to attract tech companies. Let's get more with Bloomberg's Jemana Pasechi, who is at the World Economic Forum in Davos. Jemana.
Good morning, Tom. Yeah, well, we're going to talk about some of Nubank's expansion efforts. But before that, just want to welcome CEO David Velez. Good to have you here.
Thank you so much.
The talk of the town is the return of the Trump administration. And I just want to start off asking you how you're thinking about it as Brazil's obviously largest fintech company and actually the largest financial services company in Latin America. The relationship between Lula and Trump hasn't been so warm over the years. Are you worried this is going to have ramifications on business?
I don't believe so. I think ultimately Brazil is very aligned geopolitically to the U.S. It's very important for the U.S. to have Brazil and broader Latin America to be very close. Brazil has a lot of commodities, a lot of energy for data centers, a lot of water, big population. So I think geopolitically it's very important for the U.S. and Latin America to be close, for Brazil to be close to the U.S. irrespective of the political party. And I think they're going to be able to have good parties and work together well.
How are your customers feeling about the high levels of inflation and interest rates in the Brazilian economy right now? The macro isn't so supportive.
Yeah, I mean, I think the macro has deteriorated a bit over the past couple of months. But frankly, the reality is this is one more cycle. We as a company have been around for 11 years. In those 11 years, we've seen that up and down of interest rates and inflation about 5 to 6 times. Yeah. We've seen interest rate going from 8% to 15%, back down, inflation up. So people are used to it. It's part of the game of operating in a country like Brazil. And I think businesses understand how to caution their business model to make sure that they can sustain and operate within that entire environment.
Yeah, you've got about 60% market share in Brazil. So more than 1 in 2 people are using Nubank. Are you at saturation point? Have you achieved the maximum of what you can achieve within Brazil?
I mean, at some point, we're going to run out of Brazilians. Clearly, but we've been saying that for about 4 years. And even now, we're seeing over 1 million Brazilian customers coming in the door every month. 1 million customers, really. And so, yeah, I think we'll continue to grow a number of customers. But when you look at the penetration we have in the different products, we're still very early days. We have 15% market share in credit card, 8% in personal loans, 2% in investments, 1% in insurance. So there is a huge amount of opportunity to grow within the base of customers that we have to increase the revenue per customer and the type of products that we have.
What about outside Brazil, Mexico, Colombia, even Argentina? Would you be considering expanding there under Milei?
Yeah, sure. Mexico is our #1 priority this year. It's a huge opportunity. It's a very big market, over 120 million people, and there's 12% credit card penetration. Over 60% of the Mexican consumers are still outside the banking system, so there is a huge opportunity to provide banking services to a large percentage of the people that haven't been able to access the banks. And the right way to do it is digitally. We've had really great success in Mexico so far. We just passed 10 million customers, becoming one of the largest financial institutions in Mexico. And it's beating all of the metrics that we have in Brazil. So we feel very good about Mexico. Colombia is in an earlier stage, also following the same path. And to your question, Argentina, we were about to launch Argentina in 2019, and we had to pull the brakes because things changed very quickly. We're looking very curiously at what's happening right now with President Milei. And if there is continuity in some of the metrics and the progress that he's been able to do, we're absolutely consider launching in Argentina.
Okay, that's interesting. What about U.S.? I mean, U.S. is a mature market, but still, would you ever consider expanding into the U.S. as well at some point?
Yeah, I think it's possible. And to be very frank, I think if you asked me a question 6 months ago, I would have said probably not. Suddenly, things change from a regulatory environment, and there is a real sense that it might be good to deregulate all of these different banking regulations. Looking from the outside, it felt very unfriendly for fintechs and for new entrants. Now it feels more friendly. And I think there's opportunity in the U.S. to bring much more competition. While there are a lot of banks in the U.S., when you look at subsegments, like the subprime subsegment or prime or the Hispanic population in the U.S., there is a lot of lack of access to financial services and very high cost and interest rates. So we will absolutely consider, we'll see how things develop from here, but we'll absolutely consider that.
There are reports that you are thinking of moving your domicile to Britain. Talk to us about that, because you seem to be going against the grain. Most people, most businesses seem to be wanting to leave the UK as a domicile. So what's the thinking there? Why the UK?
So we haven't formally announced anything. I think what we are preparing ourselves is for the next 10 years of our growth, and the next 10 years for us is going to be about obviously solidifying what we've built in Latin America, and then expand this banking model globally. We think this model, digital banking model, is the future of consumer retail banking in the world. It's a model that serves more people, makes them happier, generates more profits for investors, and we're in the first second of that development globally on digital banking. So as we think forward, we want to make sure that we choose a jurisdiction that might help us from a business perspective, tax perspective, and financial regulatory perspective to be able to execute that plan.
Yeah, I'm sure UK Prime Minister Keir Starmer would be happy to hear that. Positive affirmation of some of their plans. David Velez, the founder and CEO of Nubank. Tom, I'll toss it back to you.
Jemana, thank you very much indeed. Interesting lines, on the US and UK. Jemana Pasechi on the ground for us at the World Economic Forum. Thank you. Coming up, the Dutch Prime Minister tells us he expects the US will continue pressing them to restrict ASML's exports of chip-making machines to China. We bring you some of that exclusive interview next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Dutch Prime Minister Dick Schoof has told Bloomberg that it is important that the security of Europe be, quote, on top of mind for President Trump as well as for Europeans, and that the two sides maintain an open trading relationship. He spoke exclusively to Chad Thomas in an interview at the World Economic Forum in Davos.
It's very important that the security of Europe is on top of our minds and also on top of the mind of the new American president, and therefore it relates very strongly, of course, to Ukraine, and make sure that peace in Ukraine is with Ukraine and with Europe. And economically, it's very important that the open relationship and the open trade relationship we have is still in place. So we are looking very carefully at import tariffs and what that could mean for our trade and our companies.
Do you expect Europe to remain united if there becomes a tariff war? Obviously, that's not what anyone wants, but is there a worry that it's sort of every man or woman for himself and countries within Europe don't stick together?
Well, there's always that worry. But in the European Council, I think we have the idea that we should do it together, that's important. Whether it's on the positive side in making sure that Europe is competitive, but also, you might say, on the negative side, if we have to react to what the Americans can do, and that's going to hurt our economy.
Are there discussions already taking place within the European Council of how you would potentially react if you had to?
Well, of course, we had some discussions about how could we react, and one of the most important things is that we should react from a strong position. I mean, Europe has a strong economy, has a strong competitiveness already, has a strong consumer base, so that's important for the United States as well. So that gives us a strong position, so you can really rely on a good discussion with the new administration and see how you can work out all kinds of deals.
You have a strategically important company based in the Netherlands, ASML. What do you expect from the Trump administration when it comes to ASML?
Well, I think that in relation to the China policy of the United States, and also when we look at the Netherlands, we are aligned, more or less. But when it comes to ASML, we have on a weekly basis, we have discussions, and we want to make sure that ASML, which is a very important tech company, and it's very important for the Dutch economy and also very important for the development of high tech in Europe and in the Netherlands, we want to make sure that that position is in place, and therefore we also made all kinds of arrangements with ASML and with the local government and the technical university to make sure that ASML can thrive, but also the whole community around Eindhoven, it's called Brainport, can thrive.
All right, the Dutch Prime Minister speaking to Bloomberg there at the World Economic Forum. Coming up, our conversations at Davos continue this hour. We're going to discuss President Trump's energy demands on Europe with the CEO of French utilities company Engie. That is coming up. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Thursday. These are the stories that set your agenda. Asian shares mixed after China urges insurers and mutual funds to buy more stocks. The latest support for markets in the face of Donald Trump's tariff threats. Billionaire bust up. Elon Musk says, show me the money to companies that promised President Trump billions for AI infrastructure. OpenAI Sam Altman pushes back, though, saying Musk is wrong. Plus, in our Davos exclusive conversations, Volodymyr Zelenskyy calls for US troops in a potential peacekeeping force in Ukraine. And Argentina's president says he could leave the Mercosur trade pact in return for a deal with the US. European futures seemingly searching for a catalyst this morning after 6 straight days of gains, punching through record highs by the end of the close yesterday, adding, around 0.4%. By the close yesterday on the Stoxx 600, currently pointing lower by 0.2%, but again in the context of a run-up of 6 days of strength for European equities. The FTSE 100 futures are pointing lower by 0.3%. S&P futures stateside kind of pointing lower by about 0.1% after 3 days of gains and near record highs for the S&P 500. Nasdaq 100 futures currently pointing to losses of 0.2% after adding more than 1%. A strong day again for that tech-heavy index yesterday. Let's flip the board and have a look cross-asset. Jobless claims out of the US later today should give us more colour in terms of the health of the labour market. You are still seeing pricing of a little over 1 cut through the rest of the year for the Federal Reserve, about 36 basis points by year end. 460 right now on the benchmark US 10-year. Not much movement across the Treasury curve in the session today. Euro-dollar at 104. Brent a little softer, down 0.5%. Some reports suggesting, industry reports suggesting that there is an inventory build-up in the US in terms of the stockpiles there. And gold at 2,754 on the yellow metal, just down 0.1%. Now, talking of energy, European natural gas for delivery this summer has become even more expensive than prices for next winter. This after continued supply tightness. And as Germany discusses subsidies for refilling storage sites, maintaining sizable fuel inventories has, of course, become crucial for Europe's energy security since it lost most Russian pipeline flows. Let's cross over right now to the World Economic Forum, Davos. Francine Lacroix standing by with a guest who can talk to this issue. Fran.
Tom, thank you so much. Now joining us now is Catherine MacGregor, Chief Executive of the French utility company Engie. Thank you so much for joining us. Ms. MacGregor, there's a lot going on, of course, here in Davos for the last 3 days as Chief Executives trying to understand what the Trump policies mean for them and their business. There will be a virtual address, we understand, today by Donald Trump, also engaging with Chief Executives. What do you want to hear from him?
Well, I think I would be very interested to hear about energy policy for United States businesses, and how energy can enable Trump's agenda on growth and on business thriving in the United States, where I think and I hope that renewables will continue to play a major role. Time to market for renewables is exceptional, and given the growth demand that we are expecting on energy in the United States, I would expect that renewables are going to continue to play a big role, which is important for a company like Engie, as you know, we are present in the United States, and we would like to continue to be part of this renewable growth stories.
But when you look at the IRA and the fact that, Donald Trump maybe wants to take back the money that has been already spent on IRA, do you think that's money that will go into renewables in Europe instead, the collateral benefits maybe of some of the Trump policies?
Well, I would, first of all, on the IRA, I think we'll have to see exactly what happens. Renewables are very competitive as an energy production mean. So whether tax credit will continue or not, I don't think necessarily it will pose a major problem for renewables. There is, again, such a demand. And then turning to Europe, renewables, first of all, are a very important part of the European mix. Almost half of the electricity produced in Europe last year came from renewables. So renewables are already a reality. And indeed, I think not only they're bringing solution to climate change, decarbonizing our energy mix, for sure, they are also bringing this better sovereignty. So whatever is installed in Europe is producing regardless of other partners' willingness to import or export to Europe. So I think the sovereignty that renewables bring should indeed be an additional argument for Europeans to continue and don't lose the conviction and the determination to develop these renewables powers.
How much do renewables depend on the actual price of energy? So the lower the price of energy of fossil fuels go down, does it push back actually the adoption of renewables?
I really don't think so. In most cases, you will see that renewables are actually very competitive. Of course, they don't suffice alone. You need to complement them with energy storage. So batteries are going to be very, very important. You also need to look at upgrade to the grid. So all these elements are going to be very important. And then we talk a lot about electrification, but there is also the molecules. As you know, we can't electrify everything. So there's going to be also work to be done on greening the gas. And here, things like biomethane, et cetera, are going to be really important.
Catherine, talk to me a little bit about how, again, there's a lot of tensions and question marks of what happens with Ukraine. We're talking about the gas transit deal being put to an end. What are you expecting for energy prices in Europe for this year to be like? More elevated or less elevated than last year?
Nothing like during the heights of the crisis. Okay. So the prices have come down. However, we are expecting volatility in the energy market to continue to be strong because the volumes that were exported from Russia to Europe have disappeared from the global markets and have not been replaced by new capacity. And here I'm talking about the gas. So we're expecting, in terms of security of supply, we're not alarmed, even though the storage in Europe is a little bit lower than last year, but nothing completely abnormal. So we expect security of supply to be at good level. On the other hand, volatility is expecting to be quite high until roughly 2026, the end of 2026, where new volumes should come. Mm-hmm. But again, this volatility, renewables and energy transition is actually a very important answer to that, because the more you can have local production and the more immune you are from external factors. So energy transition, good for sovereignty for Europe.
But for the next 12 months, should European users expect their gas prices or gas bills to go up?
There is a number of factors. We are not alarmed again. It is very difficult to forecast the energy price, but I'd say watch the volatility. That's important. And let's keep at it on the energy transition front.
Can you give us an update? I mean, you said, of course, all of your presence in the U.S. Are you expecting to reduce the headcount because some of the uncertainties in the U.S., or will you stay steady?
No, we are going to stay steady. We have, on the renewable side, we have a number of projects that we have in our pipeline, and depending on the situation, we can adjust, from one geography to another. So we like to have a bit of flexibility, but we have good projects ongoing in the U.S., and at this stage, we look forward to delivering those projects. Customers are expecting them. In fact, I was discussing yesterday with some customers in the United States, and they are expecting us to continue to deliver. They continue to be very committed to the net zero transition. Yeah. They also say it's good for them. It's good for their customers themselves. So from that standpoint, I think this determination to continue to decarbonize the power and to bring power rapidly to our customers, including in the US, at this stage, we believe is still very much on the radar screen and on the agenda, which is great.
But does the Trump administration actually slow the process down instead of derailing it?
I think maybe, if I want to point to negatives, I would say uncertainty is not good. So, noise, uncertainty. So that's maybe one point, we should ask the president this evening is, the more certainty and the less noise we have to do business, that's important. It's true everywhere in the world. So that's really the message that will help. I think there is also a question on the offshore, and we believe that offshore renewables are an important part of the future mix. But if that has to take a pause, then that'll be fine. It's a shame, but we can live with it.
Well, you can live with it. Any M&A targets? I know you have not been acquisitive actually in 2024. Or what can we expect for this year?
Yeah, on the renewable side, and I think in most of our portfolio, we're really trying to add value at Engie by mostly organic development. We can do small M&A. I think on the infrastructure side, we've been quite open to say that we have a strong presence in France on the gas side, and we look forward to having a bit of a rebalance on the power networks because electrification is such a macro trend. We would like to be part of that on the regulated asset base. So we'll be looking at organic development in Latin America on power networks, potentially M&A, but we're always very selective. Capital allocation discipline is important to us at Engie, and so we'll stick to that.
Catherine MacGregor, thank you so much for joining us today. Braving the cold, Tom. It is very cold, but not as cold as yesterday. But a good conversation there with the chief executive of Engie. We'll have plenty more from Davos throughout the day. I'm going to hand it back to you in London.
Fran, thank you very much. Indeed, another great conversation out of Davos, of course. Francine Lacroix on the ground for us, continuing those interviews through the day. There's plenty more from Davos, of course, today and going through to the end of tomorrow as well. Here are just some of the interviews to look out for. The French Foreign Trade Minister, Laurent Saint-Martin, the NATO Secretary General, Mark Rutte, the EIB President, Nadia Calviño, Morgan Stanley's CEO, Ted Pick, that will be a good one, the Saudi Finance Minister, Mohammed Al-Jadaan, and Iraqi President Abdul Latif Rashid. So all of those interviews coming up. Do tune in for those. Now, Swedish Prime Minister Ulf Kristersson has told Bloomberg that the suspected sabotage attempts of undersea cables in the Baltic Sea linked to Russia's shadow fleet is, quote, unacceptable. He spoke with Bloomberg's executive editor for Europe, Chad Thomas, on the sidelines of the World Economic Forum in Davos.
Regardless whether this is intentional or unintentional, it simply is unacceptable. We cannot accept that important fiber or electricity cables are put at risk because the vessels simply don't respect to protect them.
What actions do you think need to be taken then in the Baltic Sea to make sure that this doesn't continue to happen?
Well, the immediate action is what we are doing right now. We have much more surveillance. We combine civilian and military resources in a much more effective way. We have the ongoing NATO mission, Baltic Sentry, going on right now. So we also combine different countries, different resources to have a better surveillance, basically, and to pinpoint those vessels that we think could be part of the shadow fleet, for example, or acting in a way that raises our attention. In the longer term, we need to prove to countries that we simply don't accept bad seamanship or bad intentions going on in the Baltic Sea.
Sweden's Prime Minister talking to Bloomberg. Interesting in the context of the UK as well, and its Navy challenging a Russian ship in British coastal waters earlier this week. Now, President Donald Trump is threatening more financial penalties on Russia over the war in Ukraine. Trump said on his Truth Social network that President Vladimir Putin should make a deal soon or face more taxes, tariffs and sanctions on Russian goods. Meanwhile, Ukraine's president says any effective peacekeeping force in Ukraine must include US troops to support European allies. Volodymyr Zelensky spoke exclusively with Bloomberg's editor-in-chief, John Micklethwaite, in Davos.
It's great if we will have troops. But we have to understand that the troops will not be in the center of the capital. Yes. They will not have relaxed time. Yes, it's very important because I heard that some allies said that, yes, but it's okay, we can be in the center of some city, and then no, we don't need such contingents.
You want the front line?
Yes, with our people, of course. Yes, because this means security, and that's it. So, but it can't be without the United States. I will explain you why. Even if some European friends think that it can be, no, it will not be. First of all, nobody will risk without the United States. The second, that's what can divide NATO, divide EU and USA. That is a goal and dream of Putin, to divide this unity.
You mentioned China. How important is China in these negotiations? I mean, China is the backer of Russia. They seem to have had an impact on things like Putin not using nuclear weapons, those sort of things. Can China push Putin, and do you have any contact with the Chinese?
I had some contacts with Xi Jinping. We had a phone call during the war. Not too much, not enough, I think. Yes, he can push Putin to peace, I'm sure. I think that only President Trump is the strongest, and Xi Jinping. I think that there is no other allies who can really do it. Yes, because his economy, Putin economy, after sanctions, after everything, depends very much of China.
You would like Donald Trump and Xi Jinping of China to work together to push.
I think
push
yes.
Putin.
Yes, but not without us. It's important.
Ukrainian President Volodymyr Zelensky speaking exclusively at Davos with Bloomberg's editor-in-chief John Micklethwaite. Coming up, Argentina's Javier Milei says his government would leave the Mercosur bloc if necessary to get a free trade deal with the US. That exclusive interview is also coming up. Stay with us. This is Bloomberg.
We are working very hard on the possibility of entering into a free trade agreement. And in fact, when I recently took over as a pro tempore president of Mercosur, I pointed out that Mercosur should move forward on three fronts. One related to the fight against terrorism, drug trafficking, and that is also easy to move forward on, bringing down the common external tariff, but also being able to make progress independently. In other words, that each of our countries should have independence to be able to work on trade agreements, because clearly Argentina has decided to become integrated into the rest of the world. It wants to go back to its golden era in history, where it was an important world player. And for that, we need to move forward on free trade agreements. We need to open up the economy, and Mercosur can't become an obstacle to that. Therefore, while we work with the US government to move towards a free trade agreement, we also work indoors within Mercosur so that it won't be an obstacle to move towards free trade. So we're working very hard on that.
Would you leave Mercosur to do a free trade agreement with America?
Well, if the extreme condition were that, yes. However, there are mechanisms that can be used even being within Mercosur. So we think that it can be done without necessarily having to leave Mercosur as such. And it's also worth noting this, because often when comments on the negative consequences of leaving Mercosur, reference is made to the automotive industry. But the automotive industry has an agreement outside the framework of Mercosur, so that is a false argument. So we are exploring ways for Argentina to be able to open up to international trade. And why? Because the division of labor brings prosperity. Adam Smith said so. And 250 years later, Dad holds true. Adam Smith is still right.
Argentinian President Javier Milei speaking exclusively with Bloomberg News editor-in-chief John Micklethwaite. Also at the World Economic Forum, Poland's President Andrzej Duda told us he expects Donald Trump's second term to bring a few surprises.
President Donald Trump is a specific president because for the vast part of his life, vast part of his professional life, he was not a politician, but he was a representative of a big business. He was a tycoon and a hugely successful one. So he entered the world of politics after his business experience. And that is why his way of action is surprising for many politicians, and he always thinks out of the box. I bardzo często zaskakujący.
Meanwhile, the EU has proposed allowing London to continue clearing the bloc's trades until 2028, a departure from its previous vow that the arrangement would end this summer. The Commission says it will consult with member states on extending the transition period for another 3 years. Efforts by Brussels to move clearing from London have been met with scepticism from the financial industry, which believes Europe does not have the infrastructure to handle the trades. Meanwhile, UK Prime Minister Keir Starmer has announced plans to prevent legal challenges from causing delays to major infrastructure projects here in the UK, in the latest effort to convince investors that the government really is serious about economic growth. Local opponents and campaign groups will only be able to make one legal attempt to block projects. Speaking to Bloomberg at Davos yesterday, Chancellor Rachel Reeves said that when it comes to planning, the answer, quote, can't always be no. Plenty more coming up. Stay with us. This is Bloomberg.
I personally think that he's going to have to raise some revenue because the fiscal outlook for the U.S. is pretty bleak. And Donald Trump basically believes in tariffs. I mean, he keeps talking about President McKinley, who was the king of tariffs. And I don't think you talk about President McKinley unless you're serious about raising tariffs.
That, of course, was Bloomberg opinion columnist Bill Dudley saying he believes the fiscal outlook for the US is bleak, commenting, of course, on the prospect of tariffs as well. And the animating factor, clearly, when it comes to tariffs for Trump is the trade deficit that the US has with some of its trading partners. Top of the list, of course, is China. And these data points go back to 2023, but they are the freshest ones that we have in terms of the overall year when it comes to that trade deficit. And the trade deficit that the US runs with China back to 2023, $280 billion US. This year, the most recent number, China has a trade surplus globally of close to $1 trillion. That is the animating factor driving Trump's considerations around tariffs. He's voiced 10%. We'll see what comes into play. But the other list of contenders here, of course, includes Japan and Germany. And, of course, that is centre to his animosity, arguably, around the European Union, which he describes as treating the US as very unfair. Let's flip the board and have a look at what's happening in terms of the stock rally that's continued stateside. Bit of a pause in terms of the picture today, at least on the futures front. But we've had 3 straight days of gains. Interestingly, you have seen a broadening out of this equity market stateside. So the top 5 performing sectors so far this month have not included technology. We'll see if that changes on the earnings story, of course. But in terms of the equal weighted S&P index, that's actually outperformed the S&P over the start of the year in January. So the broadening out story, the breadth is starting to play out, and we'll see again if that happens. More companies trading above their 200-day moving average. Let's flip the board again and have a look at what's happening in China, because a number of pretty significant measures coming through in terms of China compelling, policymakers compelling the insurance industry and state-backed companies as well, state-owned companies, to lean into the equity markets there. That could provide some ballast if those tariffs come into play. So that is a story worth unpacking for you today as well. Here's some of the other interviews to look out for from Davos. The French Foreign Minister will be speaking to us, also the NATO Secretary General. But the opening trade is up next. This is Bloomberg.